But the Bitcoin, when I started looking at it, was about $55,000. Then it went up to 66, 69,000. Then it dropped to 17,000 per coin. And now it's back hovering around between 90 and 101, maybe 82 yesterday. The movement of this is tremendous. I had the people from Grayscale in my office not too long ago, who are one of the biggest players of Bitcoin in the world. And they said, look, we're really convinced that the value of Bitcoin is going to go to 250,000. We're just not convinced that it's not going to go to 30 before it does that for 250. And if it does that, that's a 66% correction before it goes up eightfold. That's a lot of volatility. And that's why it's hard for me to push that into the average consumer's pocket, because this is toy money, play money that you can make a lot of money with. But if you're risking your retirement savings on it, it could blow up. So what do you think? Volatility, use, longevity? Is Bitcoin around to stay, or does it get replaced with the next cryptocurrency?
I first learned about Bitcoin because the person who leads our digital asset effort at Franklin Templeton, Roger Baston, he came in one day and he said, my son just got paid in an asset called Bitcoin for playing Call of Duty on YouTube. And he was like, does anyone know what this thing is? And this was maybe 15 years ago. And so we started learning more about it and researching it, and it was really interesting. And then 2014 hit, we started learning about Ethereum programmable money, like you said, and then kind of off to the races from there. When we look at Bitcoin today and think about where it could fit in an investor's portfolio, I mean, the market cap of all stocks and bonds, like basically all investable assets in the United States, like all things that you would want to put into fund vehicles and stuff like that, it's a little bit over $100 trillion. I think it's 108 trillion approximately as the end of December. The market cap of Bitcoin is somewhere today around $1.7 trillion. That would indicate to you that that's a pretty important asset that you might want to think about including in your portfolio, and not having an allocation is an active decision as well. The issue with it is exactly what you pointed out, is volatility. And I came from a mortgage background. I worked in high quality fixed income before I did crypto. And we were obsessed with the idea of risk adjusted returns in those assets in mortgages, because the volatility of mortgages is so low that the returns don't have to be that high to give you really superior Sharpe ratios or risk adjusted returns. So it was really the denominator that was driving the risk adjusted returns in mortgages. In Bitcoin, it's the opposite. It's the numerator, it's the returns that are driving that. So your volatility is very high, like you pointed out, but the returns have also been extremely high historically. So the risk-adjusted returns that you've received from these assets historically actually been very, very good. And so we built these scenarios, which I can share with you later, that talk about what different allocations to Bitcoin in a portfolio would look like and the impact they would have on overall risk returns, like a risk return from a risk return standpoint. And if you look at just like a Markowitz efficiency frontier, if you add just a sliver of Bitcoin to your overall portfolio, your whole efficiency frontier shifts up and to the right, but much more up than it does to the right. So you don't have to add a massive amount of this asset for really, really strong positive impact on overall portfolio performance and risk metrics.